Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Monday, May 5th, 2025. Let's take a look at the charts. We did manage to close above both the former channel bottom that this week is at 112.19 and above the descending channel top that this week is 111.19. And so I've got 111.19 all week long, the descending channel top. We did close above it by about 20 cents, 40 cents last week. It was very close. I would have liked it to have been higher. I will also note that we did not close above the high of the low from 5 weeks ago. If you drew a horizontal line across that high, you could see that we actually closed below it. That's a secondary buy signal, a secondary show of strength. But by a hair, I am skewing upside now. And I think that over time, in the next few months, 3 to 5 months, 2 to 3 months, I wouldn't be surprised to see 153.13. And I think that is the play right now. I don't see a compelling reason to be short right now. I see a more compelling reason to be long. And I want to see higher, I want to see continued gains to sort of clarify that. One of those is 115.10 that you can see here. I have it as an intraday resistance level. We pushed through that Friday by 30 cents. We fell away and closed below it. I want to see even a daily settlement above 115.10 would be good. But what I mean by that is good in that I think 119.11 in reach within the week. 119.11 is a 50% upside retracement from that January high against the April low. Is that a January high or a December high? I think that's a January high. It sure looks like it to me, but it's very close. I forget. Anyway, this is the daily chart, and you can see we've got 111.65, 111.69 intersection. I've got 111.19 as a base. It's not on here, but once again, I'm going to have that all week long, and that is the descending channel top on the weekly chart, 4-month channel top coming down. And so there's a lot going on in here, but we're going to keep it simple. A 50-cent range between 111.19 and 111.69 that is below the market. For day traders, you could say that's well below the market. It can absorb selling not only for the day, not only for the week, but through the month of May. And above which 124 even, or in other words, I've got 124.09 here. This descending 2/3 speed line remains a 2 to 3 week target, and I think that's realistic. And assuming we close Friday above 115.10, I think that could be inside of 2 weeks, certainly. 124.09, able to contain weekly highs. This is a decent 2 to 3 week swing trade right now. 111.19, 111.69, and of course the former channel bottom on the weekly chart is 112.19. This is a decent 2 to 3 week swing trade for those of you who trade that time horizon. 124.09 is also an area to not only take profits on a long position, but to even play the short side back into the lower 110s again. Closing above 124.09 would then likely yield the 153.13 January high inside of 2 to 3 months. I'm going to call it a 3 to 5 month objective right now, and this allows the market to top out at 124.09 for several weeks perhaps, before then presumably closing above and continuing higher. So that is kind of the big picture. We are bullish above 111.19, 111.69, also 112.19. I'll let you pick your point, anticipating the lower 150s over the next 3 to 5 months. But we're in a kind of a spooked market still. There are still these uncertainties. We still don't know where the tariff situation is going to end up over the next few months. It could get worse. It could get better. The economy could sour. The economy could continue to show strength. I mean, those are always factors, right? But I think there's more anxiety than ever before. But if I had to take a trade right now, and I'm talking more like in the 3 to 5 month, 2 to 3 month time frame, it is being long NVIDIA. The low 150s in reach within 3 to 5 months, within 2 to 3 months of closing above 124.09. I think I covered the upside pretty well. Now let's cover the downside, and that comes into play really. I'm going to show you this 111 65 descending channel top. Now, once again, I've got 111.19, and I hate to throw all these different numbers at you, but this descending channel top on the daily chart is 111.65. On the weekly chart, it's 111.19. So I'm just giving it a little more breathing room to the downside. You've got 111.69 today, as well as the former channel bottom. This is a 4-cent range, and we're really making more of a 50-cent range here to include the weekly version of this descending channel top. So the question is, what if we break 111.19 today? I think the better question is, what if we close below 111.19? Because there's a lot of room now for this market to fall back in here. I have 115.10, which is this high here that we pushed through slightly late last week and did not close the week above it. This 115.10 is the high of the low. I want to see the market close above it today to yield 119.11 within the week. I think that the 119.88, 50% upside retracement is in reach this week anyway. It's just that we could fall back into the 111 handle quite easily, possibly today, where we could bottom out through the rest of the week and by Friday's close perhaps reach 119.88. Closing today above 115.10, I don't expect any testing of the 111 handle. What I would expect is a 2 to 3 day rally to 119.88. There, I think I said it a little bit better. So I want to go with the downside scenario here. What if we break not only 111.65, but also the weekly chart version of that same structure? And so what if we close below the weekly version of the same? 111.65 is 111.19 on the weekly chart. We could perhaps see 106.35 today. The likelier outcome is if we close below 111.19 today, we visit 106.35 tomorrow. 106.35, I have it as a session containment level. It could contain selling. If we test it today, Monday, Tuesday, let's say, Monday, Tuesday, Wednesday, let's say, there's plenty of time for the market to reverse and close the week itself back above this important 111.19, 112.19 area, which maintains a longer-term buy signal, all right? So we could early in the week visit 106.35, and there's time left to recover so that we could close higher. We could actually close above the 111 handle support, and that will sustain a long-term buy signal. Now, if we happen to close below 106.35 over the next few days, then all bets are off. We have, number one, just a clear-cut sell signal below 106.35. There's also a rising 1/3 speed line coming off this low in the same vicinity. So I'm rounding down to 106.35. That is a significant downward pivot point, not only through the rest of the week, but into later May. I'll get to that in a moment. Closing below 111.19 is a bit, or 111.65 on the daily chart, is a bit of a rejection of a longer-term buy signal in and of itself. The question is whether we'll see continued decay, continued sell-off as we move through the rest of the week. And I think in terms of an intra-week sell signal, in terms of a sell signal that I think you can play into later May, that is a settlement below 106.35. So, this is also a day trade. If we break 111.19, 106.35 is in reach. You could play the short side below 111.19, take profits at 106.35. I also think you can buy 106.35. Day traders and 3 to 5 day swing traders should consider this a 3 to 5 day possible buy area, whereby from there we round back up to close above 111.69. But if we close below 106.35, and that's rising every day, any day this week, this is the scenario that I would expect. Bearish continuation within 2 to 3 weeks, probably within 1 to 2 weeks to 95.23. And by that point in time, we are in buy signal failure. And that buy signal failure may carry with it a bearish continuation as we move into later May, early June, the lower 80s. I think that is the real possibility here. So keep that in mind. If we close below 106.35, we may well see much lower trade than just 95.23. This is a solid 1 to 2 week swing trade below 106.35, but I think over time we could see the lower 80s. If we close Friday clearly back below 111.19, I think that will keep the lower 80s in reach, and I think you can actually play that. And I will be talking about that later in the week, Thursday, Friday, that if we settle Friday below 111.19, I would have to think that would also be shortly thereafter a settlement below 106.35 if it's later in the week. Once again, let me clarify. 106.35 is good early in the week. It allows the market to bounce and close the week by Friday back above this 111.19 to 112.19 area. But if this is a Friday development and we ease back into this area, we need to get out of here pretty quickly, like on an intraday basis. Closing below 106.35, I'm just going to say 95.23 likely within 1 to 2 weeks. And yes, closing below 106.35 would also imply a weekly settlement below the significant 111 handle, 112.19 area. And so this, I guess, is another way of saying this is an early lead on a meaningful sell signal that moves into June. If we close below 106.35 over the next day, 2 or 3, that is an early lead on a longer-term sell signal that should play out through May and into June. 95.23 expected within a couple of weeks where we could bounce nicely. But within a month or two of closing below 106.35, we could and I think probably would see the lower 80s. Once again, the last thing I'm going to say is just closing the week Friday below 111.19 will indicate the lower 80s as a 1 to 2 month target. And an early lead on that scenario would be a settlement below 106.35. Okay, I've said it, and I'm pushing 12 minutes. Please click like, share, subscribe. Check out wickedstocks.com. Please take advantage of that 5-day free trial. You get daily triple Q, daily SPY analysis, weekly Apple stock analysis. You get 2 stock picks every week. We've had some pretty good trades here the last few weeks, and some of them are still relevant. So you can see it all for free by going to wickedstocks.com. I'll be back tomorrow with Tuesday's NVIDIA. You have a great day.